Welcome back to The Retirement Key. My name's Casey, and today we're going to dig into a topic that can quietly steer your retirement off course without you even realizing it, and that's the difference between a conflicted versus a non-conflicted investor. And to help us unpack what it means to invest with clarity and confidence, I'm joined by Joshua Barban, financial advisor at Abich Financial Services. JB, hello to you, sir. How we doing?
Hey, Casey, I'm doing great. How about you?
I'm doing great. You're looking sharp in your camel. Let's get right into it. Start at the top because this term conflicted investor could be new to some of our listeners. So, JB, what does it mean to be a conflicted investor versus a non-conflicted investor?
Yeah, I think there's kind of two levels of it. You've got an internal level where you're conflicted with your own emotions, you're conflicted with your own thoughts or your thesis. And then there's an external level where you have so much of the Wall Street, the markets, and the industry pulling at you, the noise. So you can be conflicted from the outside, but I think even more importantly, the internal conflict is what's most important, settling that.
Well, that's a great breakdown, JB, and I think it naturally leads me to my next question, which is how can someone listening right now figure out whether their advisor is truly working in their best interest or if there might be some hidden incentives at play?
Yeah, I think advisors generally are a pretty good bunch. I mean, you have some bad apples in every industry, but what you definitely want to look for in an advisor the ideal advisor is neutral. He's not super one way or super the other. Everybody has a house style. That's what I like to call it. Mm-hmm. Abich is focused on phase 2 retirement planning. I mean, that's kind of our specialty. That's our focus, and we have a philosophy how we do planning based around that, right? You go to another firm, they're going to have a philosophy. Vanguard has their own philosophy. Everybody has a philosophy, but when it comes to the actual advisor and the giving of advice, it has to be working for you. And so you'd really want that advisor to be neutral, able to tell you the truth, able to point out where you're maybe off track or something doesn't fit the right way for you, but also not so super incentivized by something else that would take his or her focus away from your best interests.
And I think that's where transparency becomes so important. But I think even with a trustworthy advisor, things can still go sideways if your personal goals, your comfort with risk, your expectation for returns aren't all working together. So what are some of the common scenarios where those three goals, risk tolerance, and expected returns fall out of alignment?
Look, a financial advisor in a lot of ways is like a psychologist. As much as they know their product, they know what they're working with, they know the markets, but they also need to know the person they're working with. And sometimes that is the actual issue in the relationship. That the person that I have a class A example that has happened the other day. I don't mean to pick on anybody, but just like point as a great story.
Okay.
Somebody came to me and said, "Look, JB, I want to do some serious tech investing. I believe the tech is the future, right? AI, I want to be involved in that. If I could only own one stock, it would be Meta. That would be the only thing I would own if I could only own one thing, right?" Okay. Then their portfolio was 100% in what's called the G fund, which is government fund in the TSB. It's very conservative. It's about as conservative an investment you could possibly be. And when I was meeting with them, I was concerned that what they were saying out of their mouth wasn't matching with what they were doing. This is the classic conflicted investor where they wanted something maybe in theory. That Friday after we had a conversation, it was like a little ugly in the markets. I mean, it wasn't terrible, but it wasn't the 1929 crash. It was just a volatile day. I got an email like, "JB, I can't scratch everything.
Forget everything I said. Forget that meeting ever happened."
Yes. I'm just going to stick my money in the G fund and pick up 3%. So, truly, he was a conflicted investor. He wanted something in theory. Maybe that wasn't actually what he wanted, or maybe he hadn't really thought through what it would take to get what he wanted. So that, an advisor's not a miracle worker. We can't make somebody have a higher risk tolerance than they do. So this works in reverse too, where you come in with super high risk tolerance or supposedly in your head, and then you actually, when the rubber meets the road, you don't have what you thought you had. You didn't have it like 25 years ago when you went through, whatever the stock market bubble or whatever. So this is why it's so important to get really in touch with what is your thesis of the future? Have a dogged pursuit of a thesis. Really understand where do you expect the world to go? And then have an allegiance to truth. Some people, Casey, not to drag this on, but some people come to me and they don't have a real allegiance to the truth. Like they don't want to really know what is true. They're okay to move through investing without really having a well thought out thesis, and that's a big problem too.
Well, and it sounds like communication is so important. It's really the key here. So what role does ongoing communication play in keeping that alignment strong between an investor and their advisor?
Yeah, that's the key. I mean, conversation between the advisor and being open and honest. And sometimes you don't know what you don't know until the rubber meets the road. So you don't really know that risk tolerance until you go through something, right? And then you find out, that was a little more than I was comfortable with as a retiree. So it's just being open, being honest. And that's one of the huge advantages of working with a financial advisor, that you actually have somebody to bounce this off of, to really get a good idea of like what fits me right, what is the right positioning for me at this time in my life, and I don't have to go through it alone or stick my head in the sand and just try to survive it. But I can actually just be open about, what, this level of risk is too much or not enough, and that's an advantage of having an advisor.
Yeah. Well, I know you've worked with a lot of retirees, JB, so I'm curious, can you share a story or an example of someone who really benefited from working with a non-conflicted advisor?
Yeah, absolutely. I think somebody who came on board with me probably about a year ago, they were sort of the opposite case of the first one I described, where the guy was very conservative, wanted to be aggressive. This person was more aggressive. We kind of began the relationship, and as it's blossomed a little bit more, I initially proposed, hey, you maybe you're taking a little bit more risk than you should. At that time he was like, I feel okay with it. As we've had this good market and he's watching his account grow and kind of settling into his first year of retirement, he's seeing, what, I don't really want to lose my whole, nest egg over a gamble in the market. I'd like to have a little bit more safety. So this is kind of that reverse case. It took a little time, open communication, but he came to me. I didn't even go to him, bring it back up. He said, JB, you know what we talked about a couple months ago, it's really been resonating. And now I think it's time that I do take a little bit off the table. So that's a case, that individual was a good case.
Before I let you go, JB, for anyone listening who's wondering, okay, what do I do now? Let's give them something actionable. So what steps can someone take today to assess and improve the alignment of their own investment strategy with their retirement goals?
The perfect thing you could do is actually schedule with Abich. And I just sound like a shameless plug there, but it is, because we have a free and complimentary Where Do I Stand plan meeting. That's one of our baseline offerings, And when people come into our office, they get at least that first. A lot of times people, Casey, don't even know where they stand. They don't realize they've never put it on paper, like, oh, this is kind of who I am as an investor. Does that feel right with me? And so one of the things we do in that meeting is just look at income, look at portfolio, look at everything really, and just say, hey, does this align is this who you think you are? Does this check out with where you are today? Or does a second opinion raise some questions, So at the minimum, just getting a free second opinion, I think is, or, you could always ask the person you're working with too, but, the free second opinion never hurt it either.
Absolutely. Well, JB, thank you so much for your insight today. Listen, we know we've covered a lot. So if you've got questions, if you got you thinking about your own retirement strategy, or if you're wondering whether your current advisor is truly working in your best interest, don't wait to take the next step. Everything you need is at our website, theretirementkey.com. You can get connected with JB and the team at Abich Financial, and you can start working towards your ideal financial future. Thanks so much for hanging out with us today, and we'll see you next time.